Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. Again, it is lecture time, and this week's topic is the 5 mistakes that most new traders make. And you know what? We could scratch out the new trader thing. It's the 5 mistakes that most traders make. Most of you guys are making these mistakes and it's costing you serious amounts of money. And for those of you that are brand new, it's not even costing you serious amounts of money. It's keeping you from being successful in this business. Most traders fail because they don't abide by the rules of the game. And these mistakes are some of the things that all of you out there are doing. So I want to talk a little bit about that today. The lecture went a little bit longer than I wanted. It's just over an hour. I've gotten a couple emails from people or comments saying, you know, Jared, you should really shorten your lectures, make them 20 minutes, 25 minutes. Let me just say this to you guys, okay? I understand that an hour is a long time to watch a lecture, but guess what you get in 1 hour versus 20 minutes? 3 times more information. So every week of my lecture, that's like 3 weeks of somebody else's YouTube video that's a bunch of hoopla and fluff and pole dancing and all that other good stuff, okay? Mine aren't like that. All right, we get straight to the core, talk about real things. Why? Because this business is damn hard. It's one of the hardest things you will ever try. So won't you want it straight? Don't you want the detailed information, or you could have the fluff? It's up to you. Hit me back in the comments section. Fluff, detailed information, your choice. Okay, I understand most people have the attention span of a gnat. That's okay, but at least you can watch it later or divide it into different parts if you want. So anyway, today's topic is the 5 mistakes that most new traders make. Most traders in general make these mistakes, and it's keeping you from being a profitable trader. This business doesn't have to be so complicated, but you are making it that way. So that's what we're going to talk about today. And without further ado, let's get into it, guys. As always, you can get a $1 14-day trial to the stock trading chat room if you would like. The link is in the description. Also, if you like this video, click that like button. Of course you want to click the like button. It's good content, right? Other than that, guys, subscribe, right? Please help me out, subscribe a little bit. Nonetheless, Jared Wesley of Live Traders, let's get to it. This week's topic is the top 5 day trading mistakes that most people make, not just beginners. Some people say, oh, the top 5 day trading mistakes that beginners make. Most traders make these mistakes, whether it's in the beginning of their trading career, the middle of them, sometimes later on in their trading career. So nonetheless, we're going to talk about the big mistakes that people make and why many of you are still losing money. But before we do that, we need to talk about when will the insanity stop. This week's edition of When Will the Insanity Stop comes courtesy of a couple people. One that admittedly said he was pretty stupid and sent me the email and said basically, hey, you can use this to let people know what stupidity looks like. So I appreciate that person doing that, and you'll see that here in just a second. I thought I would throw a little curve today because we talk so frequently about when will the insanity stop and talking about the stupidity of traders. I thought it would be nice to change gears afterwards and take a look at 2 traders briefly, obviously, who are not insane, who are actually doing quite well. Just so you guys have a positive spin on things instead of always being negative. I do the negativity to scare you because these are real people making real mistakes. But today we're going to do a little bit of both. So the first one is, and you can see the title of the email, My Story Losing $3 Million Plus. So this person took $250,000 into $3 million back to zero. I understand what some of you are thinking because you had the same thought process when we talked about a person who made something like, I don't know, 1.2 million or something. And you go, well, sheesh, why didn't they just stop when they were up $1 million? Guys, you don't understand the thought process. Just to get up $1 million, you have to be a little bit crazy. So when you get up $1 million, you're not thinking clearly to be already up $1 million. So why would you think that being up $1 million would be a good time to get out?
You were crazy enough to get there, and when you got there, you just couldn't stop because you thought you might turn 1 into 5 and 5 into 10 and 10 into 20. Okay, exactly right, Eric. So how did they get there to begin with? So here's a quick one. I'm not going to go through these, spend too much time. I started trading in 1998 and traded during the dot-com bubble. I took $250,000 to $3 million plus. I traded full-time for those 2 years. And this person sent me this because they watched my money management videos. And anyway, long story short, I went into a depression, had even borrowed money from friends and family to meet margin calls. This was a person who had $3 million in their trading account, and now they can't meet margin calls and are needing to borrow money. Thank heavens I still had my medical license, went back to being a physician, worked very hard, 80 hours a week, and paid my debt. Now, why did I read the last part of this? Why did I read the last part of this? Thank heavens I still had my medical license, went back to being a physician, and worked very hard. Because nobody is immune to this. You guys think, oh, he's a doctor, he must be smart, right? He went to Harvard. Come on. Guys, the market humbles everybody. Whether you're a Wall Street person, whether you're a doctor, whether you're an MIT grad, whether you live in a tent, whether you came from the railroad tracks like Unmal. It humbles everybody, meaning anybody and everybody is susceptible to making these mistakes. It doesn't matter who you are, where you're at in life. Now, here's the positive side of that. The negative side is even smart people can make mistakes. The positive side is it goes to show anybody can do this. The market doesn't care, right? The market does not discriminate against anybody. The market just is. Smart people make mistakes. Smart people do good things. Dumb people make mistakes. Dumb people do good things. Meaning it's a level playing field for everybody. Doesn't matter where you come from. That's what I like about it. It's the greatest meritocracy there is. Let's move on. Next one, not quite as nasty as this, but still nonetheless not fun. And this I put in because even though the number is not as big, it's the time frame. And I think this one, see, some of these people losing $1 million, $2 million, $3 million, it's so far-fetched for many of you. It's like, oh, that's just dumb. How about this person? New trader, lost $3,000 in 5 days. Doesn't that seem a lot more realistic to you guys? To people that are starting out as traders? In the last 5 days of trading, I have lost $3,000 total and barely been able to keep my head above the $25,000 line. Please help me. This was a person who's in their early 20s, okay? Borrowed money from his mom's retirement fund. Borrowed money from his mother's retirement fund, and in 5 days has lost $3,000 of it, okay? Why? Because they took 1,000 into 2,000. And what do you think they thought? Oh, if I could take 1,000 into 2, then I could probably take 25 into 50, right? I'll repeat that. Because they took $1,000 into 2,000, they probably thought that 25 into 50,000 would not have been so difficult, okay? Well, it doesn't work that way. Scaling is not what people think for a new trader. You just think, oh, I'll add a zero, I'll add more shares, I'll just make more money. It doesn't work that way. And what this person clearly didn't realize was turning 1,000 into 2,000 was probably just dumb luck. They were probably risking way more than they should have to make that 100% gain. And now they've lost $3,000. It's not a ton of money, right? It's just over 10%, 12%, but they did it in 5 days. So clearly this person has not learned what money management is. So I do these things every week just to prove the point that the average trader out there just doesn't know what money management is. And if they do, they don't pay attention to it. Okay, so let's move on. I want to get through this quick. Okay, here's one more, and then we'll move on to some good stuff, okay? Here's somebody selling near the lows for minus 30%. Now, this isn't quite the same. It's similar to money management, but I'm putting this out there because many of you make this mistake, all right? So this particular person, all right, they got into, I can't remember, I don't know if they even said what they got into, but the point is they got into something, all right? And then the COVID crash happened. So I didn't want to sell because I thought the market would bounce, but each day it went lower and the pain grew. I eventually sold everything after it fell 75% just to see it go right back up on March 23rd. But I was hesitant to get back in. So I basically bought high, sold low, and now I feel like I've missed it both ways in hopes of another opportunity. I lost 30% of my portfolio, and it has affected me psychologically since. Remember I did this market bubble, the market stages? Remember that like a month ago, a few weeks ago? And I told you guys how most novices get in late and they only get out when the pain is so great they can't handle it anymore. This person flat out said it. They flat out said it, right? I got out and the pain grew, right? So as it went lower and lower, the pain grew, And then they finally sold after it fell 75%. This isn't BS when I talk about market cycles and stages. And for all of you people out there wondering, will patterns still continue to work 5 years from now? As long as human beings are breathing air, patterns will work. Because human beings do stupid things, and they're always counter trend. You guys saw it 2 weeks ago. Over the last 10 years, the market is up like 400%. The average investor got a 1.9% yearly return. 1.9%, and the market averaged like 9 or 10% during that time. This stuff is real, okay? This stuff is real. Now, on to the good stuff, okay? We talk a lot about negativity just to scare you. What about the positivity? Here's one from Andrew Brown. I'm pretty sure Andrew doesn't mind me showing you his name. Usually I black out people's names. I want to thank you both for turning me into a better trader. I started with a 30K account. I'm up 8,000 since October. Note, that was in February. All right, this is the part of the same thread. This was, I don't know, 3 days ago, something like that. Update again. So 2 months later, okay? 3 months later, whatever it is, thank you and Unmol. Up 13K since October, and mentorship 43 is what he's up, meaning 30,000 into 43,000. I don't post much in the chat because I am cracking music and watching. All right, thanks to both of you. Finally become a stable. This is somebody who's up 43% in the last 5 months. Now, some of you are going, well, geez, 13,000. Guys, I don't know why that zero is there. How about that? 43% in the last 4 or 5 months is pretty damn good. Right? This is still a newer trader. I think this person's been doing it 12 to 18 months. Still a newer trader, and they're up 43%. So next year is probably going to be unbelievable for this person. They're already off to a great start this year, the last quarter of last year, so next year they'll probably do a good job. All right, and note, what you don't see here is 30,000 into 3 million in 7 days. This is realistic. This is 4 or 5 months. So this person is averaging like $2,000 a month. That's pretty good. They've only been doing this just over a year. That's pretty damn good to be into this just over a year, and you're averaging a couple $1,000s a month. So I tip my cap to this person. All right? And they give me updates every quarter, basically, every 2 or 3 months. All right? Next, here's another one. This person I did not ask permission for, so I didn't want to put their name. But anyway, Unmol Swing Trading Newsletter, which is up like 20 or 22% this year. Market's been getting hammered and the newsletter's up. This person is up $18,000 or 18% in the last 5 months. Okay? They sent this to Unmol and then he forwarded it to me. But anyway, since basically December, this is like what? November 29th. So basically since December, 4 months. 5 months, whatever it is. This person's up 18%, mainly from newsletter trades. This is good. Again, you are not seeing, oh my gosh, I took 100,000 into 27 million. This is more realistic, a slow growth process. So for those of you that don't have the patience for a slow growth process, this ain't your business. All right, it's not your business. Okay. Now I want to move on to one other thing before we get into the lecture. All right. I promise you we're going to get into those 5 reasons really soon. But I want to test you guys for a minute, all right? I want to see your chart reading abilities, okay? So I pulled this slide out from a lecture I did, I want to say like 6 years ago. It's old, okay? So this chart is old, but that's not the point of the chart. I want to know, right here, this is a buy setup. Lower high, lower high, lower high, right? You have a green bar with a bottoming tail, okay? And I blew it up here on the left-hand side. So if you see, take a look on the left-hand side, okay? I blew this up so you can see it magnified on the left-hand side. It's the same. I just blew it up, okay? Did this buy setup stop out is the question. I want you guys to take a look at it. Take 20 seconds, 30 seconds, and I want you to take a look at it. If you want to look at the left, it's really bigger. right? It's a lot bigger. It's a lot easier to see lower high, lower high, lower high. I want to know if this buy setup stopped out or not. Okay. This is the trigger bar. That's indisputable. That is the trigger bar right there. Okay. So I'm getting some yes. I'm getting some no. There's no way to know. No, yes. It's actually, I'm going to say about 50-50. Yes and no's. There, honestly, there's yes, no's, and it depends. All right. And not the diapers. Okay. So it's literally, I'm getting tons of replies here, and there's a lot of yeses and no's and depends. So they're the three answers you'd give. But I am a little surprised at how many 50-50s they are. I was expecting a lot more yeses. Okay? A lot more yeses. So you guys are doing better than I expected. A little anticlimactic. But let's dig in. The answer to this is it depends. So anybody who said it depends, not sure, or need more information, you are correct. And this goes into reading candlesticks. All right, so let's use the big chart on the left because it's easier to see. So this green bar right here with the massive bottoming tail is the entry bar. That we're not disputing. That is the entry bar. And you'll notice this bottoming tail goes below the bar to the left, right? The bar to the left would normally be your stop loss. Right? That would normally be your stop loss, the low of this bar right here, okay? This bar right here went below that bar. So some of you said, yes, it stopped out. And I'm assuming you said, yes, it stopped out because this bar here went below the prior bar. And normally, if this current bar goes below the prior bar, you would stop out, right? Normally. But because of this bottoming tail, we don't know exactly how the bar formed. So we know where it opened. The tip of my cursor right there, that is unequivocally factual statement where it opened. Okay, right here. It opened right there. We don't know if it moved higher first and then triggered the buy and then went lower and stopped out, or if it went lower first, which means it would not have triggered the entry and then went higher later. Let me repeat, because some of you, your head's spinning, you're going, I have no idea what you just said. For this to have stopped out, this bar would have had to trigger first, right? Trigger right here first, and then pull back later and go below. That means it would have triggered and stopped out. But we don't know if it actually did that because it's possible. It's possible that this bar went lower first, meaning it did not trigger the entry. It went lower first and then triggered later. In that case, you would not have stopped out on this. So the answer is it depends. We really don't know. Okay, we need more information. We need to drill down to a lower time frame to see inside of this bar. And the reason I ask you this question is to see how adept you are at reading charts, reading candlesticks, okay? In this case, we just don't know. It may have stopped out. It might not have stopped out before it triggered. That just depends on if it pulled back first before it triggered or if it went higher first before it triggered. If you're a betting person, it probably went lower first, did not trigger, and then came back up just because of the way the bottoming tail formed. That's likely what happened, but we really don't know. All right? So I hope you guys understand that. All right? I'm not going to spend too much more time on it. I just wanted to test you before we start because I'm going to go through about 8 or 9 non-text slides, and then we're going to go through about 10 text slides. Or sorry, we're going to go through 8 or 9 text slides, and then about 8 or 9 chart slides. And I know how you guys feel about non-chart slides. You get bored, and you go crazy, and you fall asleep. That's because, well, you don't really want to be good traders, right? All right, so top 5 day trading mistakes. Let's dig in. First, this is what you all think about trading, right? Very little overhead. You get to set your own hours. All your assets are liquid. You're never tied to one place. You travel from around the world. You can't be fired or laid off. You don't have a boss. You can take a vacation whenever you want. You can work from home. If you're good at it, the potential is limitless. I mean, that's why everybody's listening to this, right? Because you want all of these things. You want the primrose path. And if we're being completely honest, the advertising out there suggests this is very easy to do. All right, to get all of these things is pretty easy to do, but it's just not. Okay, it's not. It's one of the hardest damn things you'll ever try in your life. Okay, so the question then becomes is, if all of this is really good, why don't you take it more seriously? If you could actually have a business where you could set your own hours, your assets are liquid, you're never tied to a location, you can't be fired, like this is the holy grail. So why don't you take it more seriously? It's like the holy grail is in front of you and you're like, it's not that good. Oh, so why don't you take it and treat it like a business? Because if you could actually have all of these things, it would be the greatest business of all time. So why not put the time in to see if you can do it? All right, so now what do we start with? I just listed them for you instead of keeping you in suspense. Your timeline is too short and your expectations are too big. That's number one. The number one reason traders fail is your timeline is too short, your expectations are too big. Number two, you have no plan and no focus whatsoever. None. Admit it. How many, you don't have to, it's rhetorical. How many of you right now are listening to this and going, on paper, I actually do not have a written trading plan? 50% of you? 75% of you? I know damn well it's not more than 50% in terms of who actually have a plan. Fewer than 50% of you have a trading plan, okay, written down. All right. Next, you risk too much money too soon and you have poor money management. I think we proved this a couple minutes ago, didn't we? I proved this a couple minutes ago when I said a guy 5 days into his trading career has lost $3,000. Clearly, they have no plan. Clearly, they're risking too much money. So 2 of the 5 were met just off that one email. Next, FOMO. You're over trading, fear of missing out. You take too many trades on the bad days, not enough trades on the good days. You're tongue-tied and twisted on an earthbound mission. Okay? 5, you're searching for the holy grail from some guru, right? You're chasing your tail from one chat room to the next, one advertisement to the next, one this to the next, one that to the next, and you're just searching. But what you're not searching is you, okay? You're just searching everything else but you, okay? You don't want to admit that you might actually have to work hard to make money. So that's it. Now we're going to go through each one of these bullet points. So first and foremost, your timeline's too short, okay? It just is. You want overnight success and the market doesn't care. You want to replace or exceed your old salary and you want to do it in 1/10 the time, okay? Common sense really is uncommon, okay? So here's the thing, real quick. Average hours per week worked in the United States, right? I'm looking at this 20 to 24-year-olds. Come on, man. I'm kidding. Some of you guys are in college. But my point I'm making is most people work 40 hours or less. What do most people also have? Or what do most people also get? Most people also are broke. All right. So the average person works 40 hours or less in the United States. Now, granted, that was 2 years ago. I doubt it's changed much. And with Corona, it's definitely gone down. So the average American works 40 hours or less per week. And the average American is also broke. So what's that say? 40 hours don't get you shit, right? 40 hours doesn't get you anywhere. Okay. So you want overnight success. Well, wait a second. Hold on. Graduation salaries. Okay, this is college graduates. Now remember, you need to spend 4 years to get a college degree, a bachelor's degree. Unless you're really smart, maybe you do it in 3. Most kids do it in 5. All right, so this is what a lot of people in college expect to graduate and make. Expected salary with 0 years experience, $60K. This is what most graduates expect they will be making when they graduate. Inc. did an article here not that long ago, as in like a week ago, and it says new college grads overestimate their salaries by 23%. Business majors are the most deluded of all. I love that sentence. Business majors are the most deluded of all. The average salary is $48,400. 23% off. And what did you get to make that $48,000? 4 years of college, and this is your 0 to 5 years of experience. So potentially anywhere from 5 to 9 years. If you include college, it takes 5 to 9 years to make $48,000. How many of you came into trading and in your first or second year thought you'd make more than that? You don't have to answer it because it's embarrassing to raise your hand. Honestly, at home with nobody watching you, how many honestly thought in your first 1 to 2 years of trading that you would make at least 50 grand? You don't have to answer. I'm not asking you to do that to yourself, okay? But yet, college graduates take 5 to 9 years to make $48,000. But what did we forget about college graduates? What did we forget about those folks? Oh, shit. That they have student loan debt, right? They have student loan debt. What blew me away with this slide, what really just blew me away, was the number of 35 to 50-year-olds. 35 to 50-year-old people to 49-year-old people carry the highest student loan debt in America. Think about that. You've graduated college 13 years ago, and you have the highest amount of student loan debt than every other age bracket there is. I'll repeat it. You graduated college anywhere from 13 to 25 years ago, and you carry the highest student loan debt. OMG. And you come out making $48K. Wow. Wow, 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 wow. Here it is. Here's a snapshot. Average student loan debt total per year, per person, $31,000. Average monthly loan payment, close to $400. Total student loan debt, $1.5 trillion. Rate for it. Time to pay it off, 10 to 30 years. And you all want to come into trading in 1 year and make 50 grand. College kids are taking out billions in loans, and in 5 to 10 years, because I'm including the college education, they're making 48 grand. But no, in 5 to 10 years, you expect to be making $500,000 in trading, don't you? Be honest. Be honest. You're expecting to make at least 100, 200 grand in 3 to 5 years in trading, aren't you? You know you are. Don't lie to me, okay? So let's move on from that. I'm just trying to give you a wake-up call, okay? A wake-up call about the expectations. Number 2, you have no plan and no focus. You're too distracted. You're watching news. You think Jim Cramer has something for you. You think Maria Bartiromo, other than being cute, has some news for you. She doesn't. Newsflash, she doesn't, okay? You're reading fundamentals. You're reading the earnings per shares. Oh, what did Goldman Sachs do? Did they upgrade it? Did they downgrade it? Get over yourself. You're watching too much damn TV. I mean, I think, I don't want to get all political on you guys, but you ever watch any news channel, whether it's Fox, whether it's CNN, whether it's MSNBC, are they really telling you the news unvarnished? Are they really giving you the news unspun? Nope. They're spinning everything, just like financial news does, just like analysts do, just like big banks do. They all spin the news for their agenda. So stop watching it. Stop it. It's ridiculous. You're far too distracted, okay? How many of you, rhetorical question, have a TV in your office? Bet you half of you do. And I bet you it's stuck to MSNBC. You're like, is he looking inside my office right now? How did he know that? Bet you half of you do, okay? Next, you're focused on too many patterns. Oh, I'm going to do a 3-bar play. I'm going to do breakouts too. I'm going to do biceps. Yeah, might as well throw in some climactic parabolics in there, and we'll do some reversal plays and some turnaround plays. No, man, no. Most great traders and most successful people, they master one thing. Ultimately, they become a jack of all trades eventually, but in the beginning, they master one thing. Guys, pick one. Literally pick one pattern. Pick one. One. Maybe 2. I shouldn't have said that. Just pick one and master the heck out of it. You have too many indicators, okay? Fibonacci, stochastics, moving averages, Bollinger Bands, MACDs, blah, 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 okay? And you all think they're the holy grail. Oh, that MACD crossover, that bad boy's money. No, it's not. It's not. I'm not saying you can't use an indicator, but you don't need 5, 6, 10 of them. You just don't. One or none, okay? You're trading too many vehicles. How many of you, again, rhetorical, how many of you have traded at least 2 or more of these? You went from stocks to Forex and Forex to options and options to crypto and crypto back to Forex. And then you tried options again and you're trying to do 3 or 4 or 5 balancing all at the same time. Remember what I said a second ago. The truly successful people master one thing first and then they become a jack of all trades later. You don't master two things at the same time. You master one thing first, and then you expand upon your mastery to other things. Pick one of these four. I'm not a big crypto fan. Pick one of these three, and then master it, and then add to it later. Okay? Master it. I know you guys are trading all these damn things. It's ridiculous. Outcome goals with no process goals. You have no plan. You have no focus. You're tongue-tied, twisted. You're scattered all over the place. Okay? Your charts look like this, and you really can't even see the candlesticks in between. I don't know why that froze right there. There it is. Big delay there. Sorry about that, guys. All right? Your charts are looking like this. I mean, who needs all this crap on your chart? You don't need it. Okay? Just get rid of it. It's not simple. Price and volume are all you need. Okay? Let's move on. Basic trading plan, guys. Basic trading plan looks like this. You have goals and objectives first. You have a universe, stock scanning and trading strategies. You have your pre-market activities, your intraday activities, your post-market activities, trade management, and money management. These are all chapters, basically. Chapters in your trading plan. Trade management chapter, money management, and that chapter could be one page. It could be half a page. It doesn't have to be 7 pages for each chapter. Balance. Understanding the stresses that are involved, your mental and psychological well-being is what this means. And when I say balance, your mental and psychological well-being is important. Continuing education. And before you go, oh, I'm not talking about taking professional training. I'm talking about talking to trading buddies, reading books, learning charts, right? Scanning those charts, journaling your trades, tracking your trades. That's what continuing education is. Okay? And remember, you're never going to get better by practicing what you're already good at. It's like going to the driving range. Nobody practices their short game. They all practice their driver, right? They pull their driver out and they got 100 balls in the bucket and they hit 70 of them with a driver. Maybe you know, considering it's 70% of the sport or the game, chip and putt a little, putt a little. So continuing education is very, very, very important, okay? This is what it looks like. This is what a good pre-market looks like, okay? Turn off outside influences, all right? No cell phone, turn it off. TV, shut it off. Kids, shut them off, lock your door. Other distractions, pets, dogs, spouses, whatever it is, shut it off. Shut it off, okay? Trading is tough enough, let alone when your kids are banging on the door or your wife's asking you, honey, can you go to the store later on today? No, I am trading, leave me alone. Done. So 8:45 to 9 a.m., review your trading plan and your daily goals. Every day for 5 to 15 minutes, review your plan. You should have your full-size plan, which is going to be anywhere from 3 to 10 pages, and then you have a little cheat sheet, and I'll show you the cheat sheet in a second. You'll have a cheat sheet. It's like a one-page piece in your plan that's basically just general things you need to go over before the day starts. Every day do this. Review it. It takes 5 to 10 minutes. Just review it. Focus your mental outlook on it, okay? Then you formulate a daily bias. What is the market doing today? Gapping up, gapping down, no bias, moving sideways. Mark off your support and resistance areas. Pre-market scanning. Once you've built your bias, scan. Gap scan sectors, daily watch list, dollar gainers, dollar losers, NASDAQ heat map, New York heat map, etc. Use all of these things to scan. Finalize your watch list. So once you've scanned and you've put your watch list together, put those ideas on your thumbnail charts. And then 5 minutes, 3 to 5 minutes before the market opens, shut it all down. And I don't mean turn your computer off. I mean take a minute and visualize how you want your day to go. Like athletes do. You ever see a fighter in the locker room before they go out? You ever see athletes do it? They have that little talk. The coach comes in and then he leaves them alone. And then they all meditate. They do what they do. And then they go out. It's game time. It's game time. You need to do the same thing. Okay? Now, this is part of my trading plan cheat sheet. All right? See where it says trade management rules. I always review my rules. Why? Because I have a hard time following my rules. Sell a quarter at 1R. Move stop to break even after the stop has reached 1R first target. Sell back 3/4 at 2R. Consistent 500 risk per trade regardless of P&L, time of day, or type. This basically is saying no half lots, no quarter lots. If you're going to trade it, you trade it. If you're not, then don't. Okay? Went up 3R close for the day. You can choose to quit. This is a basic cheat sheet. My main plan is about 9 pages. Okay, it has pictures of patterns I trade in it. And then the remember part, I'm not going to read it, but I'm going to put it on the next slide for you guys if you want to take a screenshot of it. It's something I wrote many, many, many years ago, like 12, 13 years ago. Okay, I think it's worth you guys, again, maybe take a screenshot of it. All right, here it is. You'll see it in just a second. All right. I basically used to read this every day. I don't do it as much now, but I read this every single day. It's basically saying, hey, look, you have a plan for this. You got this. That's the general gist of this paragraph, okay? You have a plan for this. You got this, okay? No matter what happens, you'll be okay because your plan always keeps you out of trouble. Even on losing days, your plan keeps you out of trouble. That's basically what it says, okay? How strictly you follow your plan will determine how much money you make. Let the bad days be lessons, but make sure to continue to trade on the good days when high quality, blah, 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 blah. Okay? Moving on. Scanning checklist. Why did I put this in? I was going to skip this. I put the scanning checklist in because I didn't want to get 100 emails and comments from you guys about, well, how do you scan, Jared? All right? Always use multiple time frames. One above and one below. So when I scan, I use a 60-minute and a daily chart. Pre-market scanning. Okay, make sure the stock that you're scanning has relative strength against the market or the sector. Okay, make sure there's volume confirmation. What I mean by this, make sure the pre-market volume is above average. I did a lesson on this about a month ago, so I'm not going to review it. But make sure your pre-market volume is above average. Okay, that basically means if a stock normally has 5 or 10,000 shares in the pre-market, you want to have 50,000 shares today. Identify areas of support and resistance, where pivots are, where consolidations are. Understand how much room you have. Is there supply or demand too close to your intended trading range? Make sure there's a 2-to-1 or 3-to-1 risk to reward. Okay? And just always remember, non-extended trades with relative strength or relative weakness and large amounts of void rarely fail. So what does that mean? Pick good stuff. Pick good stuff. Don't worry, we're going to go over it briefly, okay? So it looks something like this. This is dollar gainers and dollar losers, and also gap up runners and gap down runners. Two different platforms. This is TradeStation on the right. I want to say this is like Real Tick or Lightspeed on the left. I can't remember, all right? This is the list you're going to need. That's it, all right? That's the list. This one, in this scenario, is sorted by volume. Okay, it's sorted by volume, but those are the lists you're going to have. Over here, mine is sorted by net change. All right, notice it goes from $6 down to 80 cents. Over here, it goes from minus $21 down to minus $1.40. I'm literally going to click on each one of these. Click, 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 not every one of them. Okay, and I'm going to look at the 60-minute, I'm going to look at the daily, and I'm going to say, wow, relative strength and relative weakness is what RS stands for, okay? I'm going to look at them and go, all right, does the chart of Tesla look good? Does the chart of BYND look good? How do the charts look, okay? So here's a look, okay? Here's an example. So you're scanning your gaps, and you see the stock that's in a downtrend. It bounces, retests the bottom, it's up 3 days, pulls back, has a buy setup, and then you get what? Kind of a 2 or 3 day consolidation, and it gaps up. Now, you know, once you get above the green line, this should actually technically be a red line for the gap. But anyway, once you get above the green line, that's the pivot. Now you know there's nothing above this stock until you get to the prior pivot, which is all the way over here at like 38 bucks. So you know from about 31 to 38, this is what we call tradable range or tradable void. So this would be a gap that I would put on my gap list, especially if the market were gapping down, because then it would show relative strength, right? So this would be a stock that I would scan on the 60-minute or the daily chart, and I go, wow, I like that gap. Look where it's gapping from, right? A consolidation area, a pivot area. Look where it's gapping to. Oh, it's gapping over the pivot. Does it have tradable void? Does it have room to move higher? Yes, it does. Smooth move down equals a smooth move back up. So this would make my list. Okay. This I showed you guys, I don't know, a month ago. Why am I putting this on? Because this is an example of your levels. When you see a gap, you need to draw your levels. Now, this is not a gapping chart. This is a monthly chart, but it shows the levels. All right, so if the market gaps to 234, I know that 233.50 is where the support is. So if the market pulls back to 234, there's a good chance it's going to bounce because that's where the support is and it's been tested twice. So know where your support and resistance levels are. Mark them off on your chart with lines. If you have to do that and get up extra early to do it, then do that. I do this typically in about 10 minutes. I put my gap list together, about 10 minutes. If it takes you 20 or 30, then that's fine. But make sure you mark off the support and resistance areas on your chart. So for example, this was, I think, yesterday, a couple days ago. Maybe it wasn't yesterday, maybe it was more than that, okay? Here is a stock that typically is a really, really, really good gap. Why? Because it's gapping under a wide range green bar. There's tons of shock value in this gap, right? This stock had a lot of buyers yesterday, and now today you wake up and the stock gaps below. So all these people that bought the stock yesterday are going, oh shoot, I'm losing money today, okay? So normally this would go down, but what do we have? Look at the line. It's gapping right into support. Guys, did the stock go lower? Nope. It gapped right into support and it stayed right at support. And look at the volume it put in. So this would be an example of drawing your support lines so that you understand where or how much room a stock has or doesn't have. In this case, this didn't have a lot of room. Yes, it gapped under a green bar, and that's really good. And yes, it gapped under a pivot, and that's really good. But you gapped right into support. That's a problem. So draw those support lines. Once you go through the charts, once you've gone through the charts, okay, you're going to put those ideas on what we call a symbol list. All right? Literally, you're going to build your gap list, and you're going to put each idea on a list. So yesterday, it was Tesla, Amazon, BY, and that was the long list, and the short list is down here. Okay? This is a bit older, but again, there's the symbol list. You just type them in here and you link them to your charts. That's it. Now, after you've put them in your symbol list, where do they go? They go into your thumbnail watch list. This is from yesterday. Tesla's in the top corner, then QCOM. We traded Qualcomm and Tesla yesterday. They were my top favorite longs, and then we traded them. My favorite shorts were FIVN, Cody, and BLMN, even though none of the shorts were very good yesterday. The point I'm making is I stare at these on 2-minute charts until 10 a.m. So when the market opens at 9:30, I literally just stare at this monitor. The green ones are long ideas, the red ones are short ideas, and the blue, that's the market. I stare at this. I literally stare at it. All right, when am I going to see a pattern? When am I going to see a pattern? When am I going to see a pattern? Why? Why do I stare at it? Because you just spent the last 30 minutes scanning the best gappers in all of the market. Why would you get distracted 2 minutes into the day with some other idea? Remember I talked about focus? Turn off the kids, turn off the TV, right? Turn off the spouse. This is the same thing with your thumbnail watch list. They made your watch list for a reason. They are on this for a reason. And that reason is they are the best ideas you could find. So therefore, they're on here. I use the 2-minute time frame because it's a good in-between time frame. If you want to trade 932, 933, 934, 948, it's a good time frame. That doesn't mean I don't trade 1-minute patterns. It doesn't mean I don't trade 5-minute patterns. But I prefer to trade the first 30 minutes of the day, and the 2 minutes is the best time frame for the first 30 minutes of the day. So this is what it looks like. It looks something like this. We start on the daily. What do we have? Stock gapping down. Notice I drew the levels. Notice I drew the levels. The green level is support here. It's gapping under this pivot. Notice this green level down here. That's the next area of support. So the tradable range of this stock is somewhere around 63 down to 55. That's the tradable range. Now, am I a little worried about the rising 200? Yeah, at 59, but that's not for today's discussion. Point is you're gapping under a pivot, under some green bars with room to go lower. So it's going to be put on, let's go back, it's going to be put on the thumbnail watch list. It's going to be put on the thumbnail watch list, and we're going to stare at it. We're going to stare at it, and we're going to stare at it, and we're going to stare at it, and we're going to stare at it until it formulates a pattern. And when it forms a pattern, we're going to get ready to trade it. Okay? So I know what my tradable void is. I like the gap on the daily. I put it on my thumbnail watch list. and it looks good under 62.50 with a stop at 62.70. And guess what? This is a 1 minute chart. So we're getting in this thing at like 9:37 in the morning. You could add to it at 62. You could add to it at 61.50. Guys, it went $1.50 on a 20-cent stop. 7-1 on your money. It's a 1 minute chart. So 30 minutes into the trade and you're bankrolling. By the way, that ADVM, guys, who's your daddy? Under $23. I told you the second time's a charm. All right, it's down almost $2 now. So you got your 2R on it, okay? You can't be scared to get back in trades, guys. You can't be scared to get back in trades. All right, so anyway, this is what it looks like all put together. From the gap and the 60 on the daily and the 60 to stalking it on the thumbnail watch list to putting it on a chart and actually trading it. That's what it looks like. Okay, let's do it again. This was yesterday on QCOM. Notice QCOM didn't have a great gap. It was a daily buy setup, but the tradable range was up to $80. So we knew from 77 to 80 was the tradable range. Now note, let's go back. We traded QCOM yesterday. Now take a look at the thumbnail chart. The thumbnail chart, because this is from yesterday, has QCOM on it. It was my second favorite idea. Right there is Qualcomm. Okay, so I put it on here and then I simply waited, right? Waited. In this case, we didn't have to wait very long. We took it right off the market open on a pre-market breakout. Okay, so basically this thing triggered, I don't know, like 9:33 or something like that. I think maybe sooner than that. But we used basically the pre-market consolidation to trade this. Okay, and there it is. 926, faves, Tesla 791, QCOM over 77. I knew 4 minutes, and by the way, we took both of these trades, both of them, all right? 4 minutes into the day, or sorry, before the market opened, 4 minutes before the market opened, I knew what I was going to trade. How's that possible? Because of focus using your gap list, all right? This is what it looked like, okay? I didn't make a ton of money because I got filled late on this, almost got skipped, etc. and so forth. But that was what it looked like. Okay? Moving on. One last chart. Quick question though. See this right here? This is not a 3-bar play. Why? Talk to me, guys. Why? This one I'm actually looking for an answer. This is not a 3-bar play. Why? Not because it didn't trigger. Don't tell me that. Oh, it didn't trigger. No. It's forming a 3-bar play. Why wasn't it a 3-bar play? Wide range bar, narrow range resting bar. Why isn't it a 3-bar play? Anybody? You have all the wrong answers. No, 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 no. Oh, there's one. Found one. Couple people got it. Guys, I'm asking you this before I get into the daily chart for a reason. I'm asking you this question before I get into the daily chart for a reason. See, the problem is many of you out there, honestly, right now are going, I don't know why it's not a 3-bar play. It looks like a great 3-bar play. What are you talking about, Jared? It's got a wide range green bar taking out like 60% of the red bar. It's got a bottoming tail. It's got a little resting bar right here. This thing, should have gone higher. I don't know why it didn't. Guys, look at the gap. Look at the gap. Okay, go to the daily chart. It had a wide range green bar from yesterday with a bottoming tail. And now today, we're gapping under the green bar with a bottoming tail, under 1 pivot, 2 pivots, 3 pivots, 4 pivots, 5 pivots, 6 pivots at $35. We're gapping under 6 pivots. Why in the world would you ever in a million years thinking about going long on this? Okay? Why in the world would you ever think about going long on this? It has tremendous shock value, gapping under a green bar and a bottoming tail, and it's gapping under all of this support right here. All of you guys that would go long on this, you either don't look to the left like Beyonce does, or you have no idea what trading is about. You didn't just spend 20 minutes putting this stock on your short watch list so that 2 minutes into the day you could go long on it. Let me repeat that because it's important. You didn't just spend 30 minutes in the pre-market putting this stock on your short watch list to magically flip your idea and go long 10 seconds into the trading day. Granted, I'm exaggerating. It was more like 5 or 6 minutes into the trading day, but you understand my point. You're not going to do that. That's what novice, dumb traders do. This is a short or nothing at all. It's a short or nothing at all. Period. The only other scenario would be climactic. Okay? That's it. So we get a gap down. We get a beautiful consolidation, a little turnaround bar. Boom. You're in at 34.50, stops 34.80. Rock and roll. Okay? Here's one more. I said the last one was the last example. I lied. Okay? Here's one more. Here's a great gap down under 1, 2, 3, 4, 5, 6, 7 green bars under a pivot, and our tradable void is this area right here. So basically 104 down to like 98 or 99, maybe a little hiccup at 100, possibly. Okay? So shock value, gapping under green bars. That's good. That's very potent. Anybody who bought this stock in the last 6 days is a loser today. Statistically, that's a fact. Anybody who bought that stock in the previous 6 days and they woke up today and this day is a loser. So the stock gapped down. It's going to make your gap list. You're going to put it on your thumbnail watch list. Thumbnail watch list. And you're just going to wait. You're just going to wait for a pattern to form. Wide bar, narrow bar, drop. That's it. You're done. Drop $2 on a $1 stop. So you got your target on it. Okay? All right. We got to move on. I spent a long time on that section. So now, morning routine in summary. Develop a morning routine that is efficient and focused. You have to be efficient. Okay? Make a short list, and I don't mean short list like stocks going low. I mean making a small list. In fact, let's change that to small so you guys don't get confused. Make a small list, okay, of 5 to 15 favorites for early plays based on gaps and other scanning. Use chart as many as you can reasonably follow. What I mean is, if you can only follow 5 charts, then only put 5 charts on your thumbnails. If you can follow 15, then put 15, but you don't want to be distracted. Okay? Use a minder for some backup ideas, or use an alert system on your platform if you have to. Guys, the goal is to consistently find the best trading opportunity. So don't inundate yourself with too much crap. Okay? Stay calm, stay confident, focus, and more focus. Man, I'm running like way behind. This is going to be like a 4-hour lecture at this point. I'm kidding. All right. Reason number 3. Risking too much money too soon. This is killer, man. Killer. You have no real experience, but you're risking 1%, 5%, even 10% of your trading account on each trade. Who here has done that? Admit it. The very first trade I ever took, I risked way more than $10 on it. In fact, I risked about $500 on the various eBay. I made $400 and I risked $500, and I thought I was a rock star. I took 4,000 shares of eBay with a 12-cent stop loss. I made 10 cents on it. I thought I was a rock star. I had no business taking 4,000 shares of eBay. Okay? Many of you have done this. Don't. Okay? Don't. You're raising your risk too quickly without the results to prove you're worthy. This is a loss gain chart. Okay? What this means is, for how much you lose, this is what's required to gain to get back to break even. So if you lose 20% of your account, you need plus 25% to get back to break even. If you lose 50% of your account, you need 100% gain to get back to break even. You don't ever want to be on this chart, anywhere on this chart. Okay? New traders should be risking $10. Period. I'm not going to lecture you because I have a zillion million videos on money management. One other comment, because some people are giving misinformation on the internet. Okay? Do not paper trade for too long. 4 to 6 weeks is plenty. Your goal for paper trading is to learn the platform, learn the buttons, learn the bells and whistles. That's it. After that, go to real money as quickly as possible, but with $5 or $10 risk. Okay? It's not real money. Paper is not real. You need to feel real emotions. You need to get real fills. You've heard me say it. I've never met a losing paper trader. I've never met a losing paper trader. You're going to go from making $100 a month on paper to losing $10 a month when you come to real money. So why would you spend 6 months paper trading? You shouldn't. It's not real. It's like spending 6 months in a simulator doing something. It's not real. At some point, you got to put your foot in the water. 4 to 6 weeks is more than enough to learn your platform. Definitely no more than 2 months. 1 to 2 months. That's it. Okay? Guys, not going to spend much time on this one. Entry, stop, target. Every trade must have one. Entry, stop, target. Entry is a stop limit order. Your stop loss is a stop market order. That's your risk. Your target is a stop limit order, a limit order. Your target is a limit order. That's your reward. That's it. Every trade must have all three. If you don't, you're not taking the trade. End of discussion. If you don't have it, you're not taking the trade. See, guys, the difference between me and half the other videos you see on YouTube or lectures you have is they're entertainment. I am not here to entertain you. This ain't Gladiator where he's like, are you not entertained? I'm not here to entertain you. I'm here to save your ass from losing tons of money. Okay? That is what my job is here to do. So stop being entertained by all these people out there and use an entry, stop, and a target. Okay? I'm serious. Stop it. All that other crap is just pure entertainment. There might be 2% value and 98% entertainment. All right? Cracking jokes and talking about ramen noodles and, all this other crap. It's entertainment. Now, money management. You guys think, oh, well, if I just start with $10 risk, and if I understand the trade, I'll just add a couple zeros. And instead of $10 on the trade, instead of making 20, I'll make 2,000. Scaling up takes time, right? The problem is new traders don't usually take patterns this good. So when you go to scale up, you're probably taking a crappy pattern. Now you're taking the same crappy pattern with way more shares than you should. Scaling up. Who was that? Was it George Bush Sr. said, read my lips, read my lips. Okay. Scaling up should take you years, not weeks, not months, years. Okay. You can go from $10 to $25 risk, 25 to 50 after about 3 months of consistent profitability. I would say at least $10 a month for 3 consecutive months. You can go from $10 to $25 risk. If you have 3 more months, okay, $25 risk goes to 50 if you're consistently profitable. But you don't wake up and go, I'm just going to add a zero. I took 100 trades, now I took 100 shares, now I'm going to take 1,000 shares. Okay? You just don't do it. It takes years to add a zero to your risk level. Okay? And that assumes no setbacks. All right. Guys, trading's hard. All right? It's not some get-rich-quick business. It takes years to get good at it. Most fail because they risk too much too soon. Most online marketing suggests otherwise. Oh, it's so easy. I've been guilty of it myself. I've put out some swag before and I stopped because it's just not helpful. All right? Please know this business will challenge you in ways you never even imagined. Okay? But always remember, if you control risk, you'll never, ever be in trouble. Okay? I can't remember, maybe it was Alan Farley. I can't remember who said the quote. It's in the Professional Trading Strategies Manual where it says, novice traders chase gains. Experienced traders control risk. I'll repeat it. Novice traders chase gains. Experienced traders control risk. Okay? That is what it's all about. Okay? All right. FOMO. Ooh, can't wait to get through a couple of these slides. You see a trade that others are in and you're not, and you chase it. Okay? You miss the ideal entry, but you have to trade it, so you get in late. You stop out of an early trade and then gunsling into bad patterns. Emotional revenge trading. General over trading and not knowing when to quit, typically on losing days. You just don't know when to stop because you have no money management rules. You're just no plan, no focus. Everything put together is FOMO. Fear of missing out, especially when you're in a chat room and you perceive, trust me when I say perceive, you perceive everybody else is making a killing and you're not. I got to get in that. Look at everybody else. They're making a ton of money on that stock. I got to get in. And it looks something like this. Okay? And it looks something like this. Great chart. Great pattern. Wide range bar, narrow range bar, rip. Do it again. Wide range bar, narrow range bar, rip. But you missed it. Maybe you were talking to your kid because you have no focus. The dog was scratching on the door and you told him to stop. And by the time you came back, the trade had triggered and you're pissed off now. And all of a sudden, you got to get in this because everybody else is making money and you can't be the only one holding the bag not making money. So you look at this way up here and you go, ooh, look at that 3-bar play. Look at that awesome 3-bar play. This is not a 3-bar play. Okay, this is crap. All right, that's what this is. This is crap. But you're thinking, oh, wide bar, little red bar. Oh, I'm going to tilt my head sideways, go upside down on my stripper pole, and I'm going to go, oh, that's a 3-bar play. It's not. You missed the trade. Sorry. Next. You missed the trade. Next. Okay? FOMO will get you in big, big, big trouble. Okay? Here's another example. Okay? Here's one where initially, this was a pretty good gap, right? The stock gapped down and had room to about, I don't know, what is that, 111, 112, somewhere around there, okay? It had room there. So the gap itself was actually pretty good, right? The gap itself was actually pretty good. But it just dropped right off the open. I mean, literally, you like the gap, but no entries. You think you missed it. See, you think you missed it. It just hit and ran. There were no entries here. So you go FOMO on it. It takes over, and you get into a trade of support. And what happens? It turns the corner, and you stop out. And you go, why did I stop out? Because you took it at support. It was a good gap. I acknowledge this. It's fine. There's nothing wrong with the gap. But there was no entry. It just dropped. It happens every day, guys. Every single day, there's some stock on the gap list that we like, and it just hits and runs with no entry. Sorry. Next. 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 That's it. Don't be taking this right at support. You're sitting on double, triple bottom support on the daily. It's not going any lower, but you're going to say, oh, look at this beautiful inverse flag, Jared. This bear flag right here. No, it's sitting on support. Oh, this is one of my favorites. This is one of my favorites. Okay. Wide range bar, narrow range bar. You're getting the calculator out. You're backing the truck up. You're going, all right, how many shares do I get of this? Because this is like just a perfect 3-bar play. It's not. Why? Because the daily chart is climactic. So not only is the stock up 1, 2, 3, 4, 5, 6, 7 days. It's already 7 days up. So 7 days up isn't good enough. We got to add 2 more things to it. So it's up 7 days. Then we need to add a 15% gap to it. And then a 15% gap isn't good enough. We need to add at least a $5 move right off the open. So 7 days up wasn't enough. Let's gap up 8 days. 8 days wasn't enough. It has to be a mega gap. It can't just be a normal gap. It's got to be a mega gap. But a mega gap wasn't enough either. Up 8 days, mega gap, not good enough. We needed 8 days, we needed a mega gap, and we needed a $5 run right off the open, because that then would make the perfect 3-bar play. You kidding me? What are you thinking? This goes back to you don't have a trading plan, which is what causes the FOMO. Because you don't know what you're doing. You don't know your ass from a hole in the wall. So you're going, oh, but it's so strong. Remember we talked about market cycles when the average person gets in? They get in at the top. And then the stock tanks. Okay? This is not a good entry. But I tell you, man, I see this every day. Every day I see this. Okay? All right. We're getting there. And reason number 5. And this is the last slide. Whew, man, that took a long time. I was hoping to do this quicker. Searching for the holy grail from some guru. Chasing your tail by blindly following others with no idea what they or you are doing. None. You have no clue. Going from one chat room and guru to the next. Always thinking the grass is greener. Mostly chasing butterflies because you have no plan to begin with. This is what most traders look like. You guys are just chasing butterflies. Chasing butterflies. Oh, look at that. They're pretty. Oh my gosh, that's awesome. Okay? That's what most of you are doing. And you're just hoping to make money without having to work for it. Just be honest about it. This goes full circle. Remember the college thing? The average college kid spends 4 years in college, has $31,000 in debt, and they come out making 48 grand in their first 5 years. It's not even your first year out. That 48 grand average is 0 to 5 years of experience. It might be your third year out of college, it might be your first, it might be your fifth. So anywhere from 4 to 9 years of experience, you're making 48 grand, and you had to pay for that, and you have debt for that. But no, you're going to come into trading in 48 hours, in 48 days, 4 months, and you're going to kill it. You're just chasing butterflies, man. You're chasing your tail, okay? There are some good educators out there, but how many of you, again, rhetorical question, you don't have to answer it. How many of you honestly have been to at least 3 to 5 different chat rooms? Ask yourself that. How many of you have bounced from 3, 4, 5, 6, 7 chat rooms out there? Guys, a chat room, a good chat room, is not meant to be blindly copied. A good chat room should teach you proper money management first. That should be the number one thing on every chat room agenda. Is the first thing out of that person's mouth should be, don't try to follow me. Money management's your number one job. And if you don't understand the trade, don't take it. And if they're not saying any of those, if they're telling you they can turn $567 into $1 million in 30 days, and I've been up 27 straight days in a row, just follow me, penny stock guru, run, and run as fast as you can. Because this is not that kind of business, man. You are going to work for it. Do you watch Tiger Woods swing and magically have his swing? Nope. You're going to work for it. And if you think otherwise, you're chasing butterflies. That's it. If you think otherwise, you're chasing butterflies. Okay? There is no holy grail out there. Okay? There is no holy grail out there. I'm not saying that if you're in a room you don't like to maybe try something else, but don't think that it's magic. There is no magic to this. You don't get a course or an education and magically you're an amazing trader the next day. Okay? You don't magically make one small adjustment and go from loser to massive winner. It compounds itself. It's step after step, right? The journey of 1,000 miles begins with a single step. There's a lot of steps in between, aren't there? Okay? So stop blindly chasing and following other people. Make sure you understand what it is that you're doing and they're doing before you even consider it. The best thing a chat room can do is keep you out of trouble, not help you get into it. I'll repeat it. The best thing a chat room can do is help keep you out of trouble, not put you into it. Okay? So those are the 5 reasons, in my opinion, that most traders just stink. All right? And I'll give you the list here again real quick. There they are. Timeline is too short. Expectations way too big. You have no plan, no focus. You're risking too much money too soon, which means poor money management. You're over trading. Your losing days are way bigger than your winning days. You're searching for the holy grail from some fuzuru. Okay? That will do it for this week's lecture. I apologize, it's a little longer than normal, but I hope that you took something from that and it will help you not only be a better trader, but keep you safe so that you'll be around for a little while so you actually have an opportunity to make money in this business. I'm Jared Wesley. We'll get back at it again next week.
To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.